48 hours. That's all it took for over $20 billion to disappear. Trading floors erupted into chaos. Bankers scrambled to dump billions in stock before the market opened. Red numbers flooded screens across Wall Street. But this wasn't caused by a recession or a war. It all traced back to one secretive man. How did one quiet investor almost break Wall Street? His name was Bill Hwang. He wasn't a celebrity billionaire. He rarely gave interviews. He avoided the spotlight. A deeply religious man, Hwang was known for reading the Bible daily and staying away from public attention. After running a hedge fund that faced insider trading allegations years earlier, he disappeared from the financial headlines. Or so everyone thought. Instead of managing outside investors' money, he created something called a family office, a private investment company that manages the wealth of one individual or family. Because family offices face far less public disclosure than hedge funds, they operate with much less visibility. Behind those closed doors, Archegos Capital Management quietly grew into one of the largest and most mysterious investment firms on Wall Street. Almost nobody knew how enormous its positions had become, and that secrecy would soon become a global problem. Here's where the story turns dangerous. Imagine you have Rs 100. Now borrow Rs 500 from a bank. Suddenly, you're investing Rs 600. If your investment rises by just 10%, your profit becomes massive. But if it falls, the losses explode just as quickly. This is called leverage, using borrowed money to multiply gains. Bill Hwang didn't borrow from just one bank. He borrowed from many. Each bank believed it understood the risk, but none of them could see the full picture. Using complex financial contracts called swaps, Archegos built gigantic hidden positions in just a handful of companies. On paper, everything looked stable. Then one stock started falling. The decline triggered margin calls. Banks demanded more cash immediately. Archegos couldn't pay. Within hours, banks realized they were all trapped in the same trade. Panic spread. Each bank rushed to sell billions of dollars worth of shares before the others did. It became a race for survival. Stocks crashed, billions vanished, and the carefully built empire collapsed like a house of cards. When the dust settled, the damage was staggering. Archegos Capital was wiped out. Some banks escaped with limited losses because they sold first. Others weren't as lucky. Several global financial institutions lost billions of dollars in just days. One of the biggest casualties was Credit Suisse, whose losses became one of the major blows that weakened the bank before its eventual collapse years later. Regulators launched investigations. Bill Hwang faced criminal charges and years of legal battles over allegations related to fraud and market manipulation. The Archegos disaster exposed a frightening reality. A single investor, operating in secrecy, using borrowed money, almost shook the foundations of the global financial system. And it leaves one unsettling question. How many hidden risks are still buried inside today's financial markets, waiting for the wrong moment to explode? In the next episode, we'll uncover another unbelievable Wall Street scandal. How one trader lost over $6 billion and nearly destroyed one of the world's oldest banks.